Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs. Today's date is January 17th, 2024. So let's get started. Let's start by taking a look at the euro versus US dollar. And recall from yesterday, the price fell below this swing area through here where we had a number of different swing lows and highs going back in time, outlining a lot of them through here. You get the point. You can see it with your own eyes. Where the price either moves lower or moves above, moves lower, moves above, finds support. But this is where this area right through here is where the price floor was really established here. And in trading yesterday, we fell below that floor. Admittedly, we entered back into this swing area through here, including today's current 4-hour bar. But the price has since rotated back to the downside. We had strong retail sales sending the euro lower, the dollar higher. But we have this green line right here. This green line represents the 200-day moving average. That moving average currently comes in at 1.08462. And looks like our low price for the day came in at 1.0850. So you got within about 4 pips of that 200-day moving average. And there has been some buying against that level, currently trading at 1.0861. So what is that? What do the technicals tell us? Well, we're seeing the consolidation below this swing area. So that's keeping a lid on the pair, keeping the bears more in control. But, we're also seeing the support against the 200-day moving average. So there's a battle going on between buyers and sellers. That's what happens in trading. What I do know is that if the price were to break the 200-day moving average, that would be the first time since going back to this day right here in December. We did test that 200-day moving average here. So the importance of it is known by the market. And that's why we saw the support buyers against that. But if we do break that, the 50% of this bigger move to the upside from this low right here, which is in November, end of October low, to this high price right here, that would be the next target, 1.08276. So be aware, be prepared. But right now, the euro versus US dollar is having a battle between resistance above, starting at 1.0878 up to 1.0894, and support below against the 200-day moving average, 1.08462. Let's take a look at the dollar versus yen next. And again, I'm going to look at the 4-hour chart in this currency pair. And recall from yesterday, I spoke to the 61.8% retracement and 100-day moving average at 147.45. That's of this move. The 61.8 is of this move down from this high right here to this low right here. So, both those lows came in at 147.45. So you expect some sellers against that level. And if you look here at the 4-hour chart, you can see that there were sellers indeed against those two moving averages, and the price rotated to the downside. But then we started a rotation back to the upside here as the the trend that we're seeing in this dollar versus yen just continues, and breaking through that level gave the buyers even more support for taking the price higher. So risk now is going to be the dual levels at 147.45. Stay above those levels, more bullish. On the top side, the next target comes in against this 148.44 to 59 level. On the top side, this level corresponds with some swing levels. And if I probably go back in time, I could probably see other levels through here, through this yellow area where the price did find support and resistance against that level before breaking to the downside and then reestablishing that level of resistance before moving to the downside. So that this area between 148, 44 to 148.59 is the next target on the top side. As long as the price stays above the 147.45, things are a go. All systems go, I should say, for that pair to move higher. Let's finally take a look at the sterling versus US dollar. We had higher inflation data come out in the UK, and that led to this spike to the upside. But the US retail sales and other data coming out today is pushing the price back to the downside here in this pair. Right before the CPI data came out, the price did break below the this key swing area. This swing area goes back in time. There's just a number of different here it was support, then it became resistance through here, ceiling. Then it became support again through here, and this was a pretty big floor here in the sterling versus US dollar that we developed through there. We did break below it, as I said, in trading here today, right before the data came out, rebounded back up and pushed all the way up through the 61.8 through the 50% retracement of this move up from this low to this high. but we are now back below the 50% retracement, so the bias is tilted back to the downside. But what the bounce did do was it reestablished this area as the price where the price of the sterling versus US dollar is most comfortable. Yes, we did break below the low of this floor here, but it could not be sustained. So you would expect that if we go back down to that level, we'd find support against the levels. Those levels right now staying below the 50% retracement of 126.63 keeps the sellers more in control from a technical perspective. But the volatility in this pair is large, lots of ups and downs. But we'll see if the sellers can stay in control. So there you have it. A look at 3 of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.